Good morning, Carl. Let's start with pending home sales in June, down 5.4% from May and down 0.3% from June of last year. That is a big miss. The street was looking for flat. Now, this count is based on signed contracts. So that's people shopping in June when mortgage rates kind of bounced around a narrow but higher range. Regionally, sales were down everywhere, with the steepest drop in the Midwest.
So if you think that was bad, here's the news we got today. So folks, it's not going to be a good day today. So here's what's going on. If you're trying to buy that first house, maybe you already bought the house, maybe you're a realtor or loan officer trying to figure out what's going on with mortgage rates, I got some bad news for you today. So folks, my name is Dan Frio. I'm the host of the Rate Update. Let's get over to what's going on with mortgage rates today. And I'm actually going to show you I'm changing my forecast because I didn't think this war would last this long. And with oil prices continuing to rally from here, don't think it's good news for home buyers at this time. So without further ado, don't fret. There might be some good news at the end of the tunnel. So I'll give you my forecast at the end of this video. What does the Federal Reserve look at? Because they're going to come in next week. They're not going to do anything. But then in the next meetings from there, I was saying there's a 100% chance they're not going to do anything. Well, I didn't figure the war would last for 4 or 5 months. So now my tune's going to change a little bit because here's what we got today. The Federal Reserve watches these things over through here. So they watch GDP, which has been doing fantastic. They watch the unemployment number, and it's been really good up to this point. Hold on a second. Then they look at the inflation numbers. Okay, inflation's twice as high as it's supposed to be. And they're saying, okay, we're just going to hold credence on here that the job market is steady. And but now we got some bad news. Okay, the bad news was this. The economic calendar today, we thought maybe the jobs market was going to start getting a little crumbly. No, it's actually getting better. So here's what the jobs claims or jobless claims look like. People that lost their jobs for the first time. These are the lowest numbers that I was watching CNBC. Rick Santelli couldn't even find how far back he had to go to find these numbers as low as this. So that's good news. Not a lot of people were getting let go. But the even better news, continued claims. They're now under 1.8 million. That's in a great direction as well. So now the Fed's sitting there saying, okay, here's what we got. We got an inflation that's running out of control and the jobs market that is fantastic. We're going to have to do something. We're going to have to put something on this economy to slow things down because we know it's oil, but we might have to just do something. So let's look at the numbers that we got today, right through here. The continued jobless claims or initial jobless claims came in at 187,000. Last reading was 209,000. Great number. Then we came in last reading. They revised this down. It was 1.8, I think 2 million people that were on continued claims. It's plunged to 1.79. So this is telling us we have a really good jobs market. So now you're going to say, okay, the Fed's looking at this saying the jobs market's fantastic, but inflation's running out of control. Well, now what they can do is they were fearing that maybe the unemployment numbers would start to spike. The counter today. So we're looking at a very good jobs report. So that means in 6 days, what's the Federal Reserve going to do? Hold on a second. Let me tell you what I'm advising my clients because my tune might be changing a little bit. Let's get over to it. I'm actually advising my clients of this. If you came into us previously and we got you pre-approved, we most likely got you pre-approved at a higher rate than the current rates at that time. Just to make sure we see things like we're going to see today, I'm going to show you the mortgage chart here in a second, and it looks terrible. So we're actually, if you get a contract in right now, we're locking you in, and hopefully you can still afford those payments. Okay, that's number one. Two, if you're looking to buy down the road or you're looking to build, what should you do? You're still going to have to watch two things. Watch oil and watch me every day. I'm going to come out and tell you if I'm wrong, if I'm right, what we should be doing. And I'm just going to tell you the facts behind it of what the market is telling us. But if you're a current home owner right now, go to our website and we can track your mortgage rate for you. So if you've already bought that house, you married the house, you dated the rate, and you're like, okay, Dan, can you track rates for me? Because I know they're up and down every day, but I just want to see if there's an opportunity for me to refinance. Well, go into our website. And right up through there, it says Rate Watch 2.2. Just plug in your mortgage information. We'll track those rates for you. So when they hit that number that you want, we'll call you, text you, email you. We'll track you down, and we'll go over the numbers, see if it makes sense. But let's go back to the bad news. I didn't start today with the chart because it doesn't look very good. Let's take the video of Diane Olick out of the way. And here's what we got for a 5-day chart. And this is dismal. Let's just go to a 1-day chart because this is even horrible. All you have to understand if you're new to my channel is that number right up through there. If it's red, that's bad. If it's over 10, that's even worse. We have a minus 41. That's bad. You want to see even worse? Let's look at a 5-day chart. This is basically when we re-engaged with Iran and oil prices went from about $70 a barrel to now they're at 95. Remember, I keep saying watch oil. As oil goes up, the inflation numbers the Federal Reserve watches and the numbers we pay for things goes up. So what happens to interest rates and mortgages? They go up as well. So here's the chart for the mortgage-backed securities. As this goes down, rates go up, and it has been down every day since we started the Iranian conflict, Chapter 2. So that's what we're seeing in today's market. It is not a good day. Stock market, let's get over to the stock market that we have for today, and that's probably not going to be looking very good because we have oil up $4 a barrel. We have oil on the oil side at $90 a barrel. Remember this trick. And then Brent crude is at $99 a barrel. So make sure you're watching the same one continuously, because if you watch one day it's at 90, and the next day the media comes in and says, okay, it's at 99, you're like, whoa, that's a huge move. Make sure you understand the numbers and the data that you're following. That's why each day I come in and explain to you guys what in the world is going to go on with these. And the most important thing is the whys behind it. So today's whys, we had a fantastic jobs numbers. I was actually hoping for the jobs numbers to get a little bit weaker so the Federal Reserve would be basically stuck and really not be able to do anything. But let's end up with what's the Federal Reserve going to do next week? And then what are they going to do after that? We took a snapshot on Monday, and this thing continues to get worse. So right now, the federal funds rate is 3.5 to 3.75. There is a 64% chance they're not going to do anything at this meeting. I'm going to say there's a 100% chance they're not going to do anything. But after that, I think there's over a 50% chance they might be hiking rates sooner than I thought. And this is contrarian to a lot of other economists. So we'll see how this goes. But do me a favor. Watch two things. Watch oil, because that's going to tell you oil up, inflation up, rates up. And watch my channel, because I'm going to come in each day and tell you exactly what's going on with these. And the most important thing is the whys. Thanks for watching, guys. God bless. Have a fantastic day. See you tomorrow. Same time, same place. Take care. Bye-bye.